In this video, we want to talk about Intel, and if we go directly to the weekly chart, the chart suggests the bottom is in, at least short term. Now, from a technical standpoint, if you look to the left, you can see that that was major resistance last year. And typically, what becomes resistance becomes support next. Now, many could also say that this is just a short squeeze. However, one analyst thinks that Intel should be on your watch list. Now, before we continue with the analysis, let's actually get into this article. So shares of Intel were up as much as 10% during the past 5 trading days. That's due to short covering, according to analysts at Mizuho. Now, analysts added that some investors believe that the upcoming Semicon West conference between July 9th and July 11th could help boost Intel as well. Got to remember, the stock is down over 25% this year. It had an amazing 2023. Shares of the technology company dropped by 15% after it posted its earnings on April 25th. Although most of those losses have since been made up. During the beginning of the year, Intel guided for Q1 revenue of between $12.2 billion and $13.2 billion. Actual revenue was $12.7 billion. Now, unless you're betting for a big guide down on Q3 or push out of the leading edge node based new product for PCs data center, then what is the incremental catalyst for downside? No investors like or want to buy Intel, so a true rebound beyond mid-30s is unlikely in their view in the coming months. The firm also added that the company has a lack of exciting growth. Now, Intel has guided for the second quarter revenue of between 12.5 and 13.5 billion. It made 12.9 billion during the second quarter of last year. The midpoint of the guidance would signal growth of less than 1%. So, although Mizuho has Intel on its watch list, it's saying that the move higher has nothing to do with the fundamentals. It's just a short squeeze. So this is the weekly chart, and we have levels of interest. We have it at $40. We have resistance. Resistance should be resistance once again. We have the $44 level. If I squeeze that up, you can see how that was major support for several years. And so that should be resistance that you had in recent months, these rejection wicks. This was the sell-off on earnings, which pushed price all the way down again to this resistance support level at $30. Price loves these round hole psychological numbers. I should say Wall Street likes these round hole psychological numbers. Now we can see 2 weeks ago we had a gap higher. Now according to the article, Mizuho is saying price should not go any higher than $35. Now I beg to differ. These extended range green candles imply that there's no real sellers. So I'm looking for a target, short-term target at $37. If we scroll down to the daily chart, we can see we had the death cross that occurred back in May. Again, you can see how price is rounding. You can see the RSI, which is a momentum indicator, pushing higher. So this was your indication that price was about to turn. You had confluences in your momentum moving averages converging, then crossing over. You do have some resistance at the 100-day moving average at $36. However, I think the next move is higher. I think price wants to get to this band, which would coincide with the 200-day moving average at $40. So look for 2 targets in the near term: $37, $39. And don't forget about earnings on August 1st. Thanks for watching. Subscribe. Please like the video.